Why did the US Mint suddenly freeze sales of their Silver Eagles? As of January 14th, 2026, they posted a notice suspending all silver numismatic products because, quote, "We cannot currently price these products due to silver market volatility." Silver spot hit $94.50 that day, up over 5% in 48 hours. Gold barely moved. US dollar index steady. Dealers nationwide report premiums at $12 to $15 over spot for Eagles. I called 3 American coin shops yesterday, and everyone said the same thing. They cannot source metal at paper prices anymore. I spent 4 hours pulling US Mint data, COMEX inventories, and dealer reports to break this down. What I found shows a physical crunch that mainstream headlines completely ignore. Stick around, because I'm going to cover 4 things. First, the exact timeline of what happened at the Mint and in the market. Second, the simple mechanism behind this freeze that most people miss. Third, what it really means for your wallet if you stack silver. And fourth, the 3 signals I'm watching that will tell us if this shortage explodes or eases. This is the physical crunch explained. Let me give you the exact timeline of what happened. On January 12th, silver spot closed at $89.20. By January 14th afternoon, it spiked to $94.50, a 5.7% jump in 48 hours. That's the highest in over a decade. Gold only rose 1.2% in the same window. The trigger. President Trump's renewed tariff threats on China and Mexico imports rattled industrial supply chains. Silver demand from U.S. solar panels and electronics exploded. Then, on January 14th evening, the U.S. Mint dropped the bomb. They suspended sales of all Silver Eagles and silver numismatic products. Official reason, quote, "extreme silver market volatility and inability to price products." This marks the 3rd suspension this month alone. First time since 2021 pandemic shortages. As of today, January 20th, the Mint site still shows sold out or suspended across silver bullion. COMEX registered silver inventories dropped 8% week over week to multi-year lows per January 18th data. Eligible stocks flat, but delivery notices piling up. Now look at American dealers. JM Bullion shows 1 Oz Silver Eagles at $106.50. Spot today hovers at $93.80. That's a $12.70 premium, 13.6% over. APEMEX lists generic rounds at $102, premiums $8 plus. I checked 5 U.S. dealers from Texas to Florida. All confirm stock low, restocking delays 2 to 3 weeks. Local coin shops report Eagles at $110 cash. Heroic premiums not seen since 2020. U.S. Mint production data lags, but December output hit record 2.1 million Eagles before halt. Demand crushed supply. Compared to 2021, Mint rationed Eagles for months. Premiums peaked $18 over. History repeating faster. This is not paper price action. This is physical reality hitting the U.S. Mint and your local stacker. Stop. That 13% premium gap. That's your key number right now. Now, let me explain why this Mint freeze happened. This is called the physical paper disconnect. Let me break it down simply. Imagine Black Friday at Walmart. The website shows TVs priced at $500, but you drive to the store and signs say sold out. Next shipment $800 from scalpers in the parking lot. The official paper price stays $500. But the real price to get a TV in your hands jumps to $800 because physical stock vanished. That's exactly the silver market right now. Paper silver trades on COMEX futures at spot, $93.80 today. That's contracts swapped between banks and speculators. No metal changes, hands 90% of time. Physical silver, the bars and coins U.S. Mint stamps into Eagles, comes from refineries and mines. Industrial buyers like solar factories grabbed 60% of annual supply. When Trump tariff talks spiked demand, refiners hiked physical premiums to ration bars. U.S. Mint bids on that physical market. They cannot pay $93 when refineries demand $105 delivered to their vaults. Result: suspension. Evidence first. COMEX registered inventories eligible for delivery fell 8% last week to 202 million ounces, lowest since November. Delivery notices surged 15%, first default whispers in January futures. Refiner premiums for good delivery bars hit $1.50 over spot, up from 50 cents a month ago. U.S. dealers pay that plus shipping, insurance, mint fees. Eagles cost Mint $5 production, but silver input now $105 real cost. They lose money minting at spot-linked prices. Happened in 2020. COVID slammed mines. Industrial hoarding kicked in. Premiums exploded to $18 over. Mint rationed Eagles 6 months. Pattern identical. Banks like JP Morgan offload COMEX shorts quietly, but physical refineries ignore paper signals. Here's where it gets interesting. Remember those dealer calls I mentioned? One Texas shop said, "We pay $4 over spot to refiner just to get 100 ounces. then 3 more to ship. By time it hits shelf, $110 retail. Mint faces same math at scale. This disconnect widens when industrial demand pulls physical away from coin market. Tariffs accelerate it. Let me repeat that because it's critical. Paper price, your screen shows, not real cost for Mint or you. Physical crunch forces freeze. So what does this Mint freeze and premium explosion mean for you? If the physical crunch continues, spot price stays headline, but your real cost climbs. Eagles at $110 today become $120 tomorrow, even if spot dips to $90. Purchasing power for stackers shrinks fast. U.S. Mint suspension third this month signals they ration production, delaying new Eagles 4 to 6 weeks minimum. Dealers already hiked $2 weekly. Last time 2020, premiums stuck $15 over 3 months. Silver spot doubled from $18 to $36. Winners. Existing holders see metal value pull away from paper. Losers. New buyers pay premium tax. Dollar savers watch inflation eat stacks. Broader signal. Industrial demand sucking supply dry. Tariffs could cut Mexican mine exports 20%. U.S. solar boom needs 150 million ounces yearly by 2027. Mines maxed. If COMEX deliveries fail more, paper price gaps up chasing physical. Everyday impact. Coin shop visits now $15 over spot average. Online $12. Families stacking for wealth preservation lose 12 cents per dollar spent. This happened pre-2011 rally. Premiums hit $9 over. Silver ran 800% in decade. Current setup tighter supply. Watch inflation print. Fed hints no cuts till Q3 despite Trump pressure. Dollar weakens, silver base strengthens. But short-term pain. If Mint resumes partial sales, Friday pressure eases slightly. Full halt through February means $130 Eagles certain. Here's why this matters to regular Americans, not Wall Street bets. Your retirement hedge, kids' future fund gets hit first by physical reality. Gap between screen lie and dealer truth widens daily. 2020 taught us premiums lag spot recovery months. Don't get caught flat. Here's what I'm watching closely this week to know if the crunch deepens or breaks. Signal 1, U.S. Mint website, Friday update. If they resume any Silver Eagle sales, even limited, supply inflow eases, premiums cap at $14. No restart by January 24th weekend. Shortage confirmed $20 premiums incoming. Signal 2, dealer premiums nationwide. Track JM Bullion Eagles. Above $110 signals worsening. Drop under $105 hints. Refinery flows improve, I check daily. Signal 3, COMEX silver deliveries next Tuesday close. Over 20 million ounces noticed. Default risk rises. Spot blasts $100. Under 10 million, paper stabilizes. Bullish continuation if silver holds $92, support 3 days running. Bearish if breaks $90 on volume, retrace to $85 possible. Not advice, but my framework. Physical over paper always wins long term. Stackers consider local shop availability now. Online delays grow. If tariffs finalize March 1st, front run with generics under Eagles. Key level, $15 premium average. Crosses that. Physical rules. I'm positioned watching these 3. So here's the recap. U.S. Mint froze Silver Eagles January 14th due to volatility and pricing chaos, 3rd time this month. Premiums hit 13% over spot nationwide. Dealers at $110 retail. Physical paper disconnect drives it, just like 2020 shortages. If Mint stays halted and COMEX deliveries spike, $120 Eagles next. If you've hit coin shops lately, drop a comment. What premium did you see on Eagles? Local shop or online? Are inventories empty where you are? Let me know if you think premiums hit $20 this month or if supply rebounds. The screen spot price hides the truth. Watch Mint restart, dealer premiums, COMEX notices. Those 3 signals rule. Next 48 hours, critical. Mint no resume by Friday, confirms crunch. Don't chase highs. Stack at your numbers, have a plan. That's it for today. I'll keep digging US data and update you. Stay stacked. See you next time.